Building wealth is one of the most important things you can do to achieve financial security and freedom. But for many, the path to getting rich seems unclear or even unattainable. Daunting questions arise. Where do I start? How much money do I need? What's the secret formula? Well, here's the good news. Building wealth doesn't require already being rich or having special insider secrets. With some core principles and habits started early on, nearly anyone can accumulate assets and create passive income streams to generate lasting wealth. Hey everyone, welcome back to MoneyWise Investor, your trusted source for financial insights. In the first part of our financial fitness series, we explored the foundations of mastering your money. Now in part 2, we'll dive into the key principles and strategies for building lasting wealth. We'll break down the essential building blocks so you can start your wealth creation journey on the right foot. You'll learn the fundamentals of earning, saving, budgeting, investing, protecting assets, and optimizing taxes. While get-rich-quick schemes come and go, these strategies have stood the test of time. People from all backgrounds have employed them to grow their money and achieve financial independence. Their success wasn't luck. It came from understanding these principles and having the discipline to apply them. This video provides the blueprint to set you up for success, no matter where you're starting. Are you ready to master the fundamentals of wealth creation and take control of your financial future? Let's get into it. First things first, what does it really mean to build wealth? Essentially, wealth building is the process of acquiring assets and cultivating multiple income streams to generate passive earnings. This provides financial security and allows your money to do the hard work instead of just exchanging time for an hourly wage. Now, to build wealth, it's crucial to have the right perspective and avoid some common misconceptions. For starters, wealth isn't just about getting rich or making a lot of money. Having an abundance mindset is important, but true wealth comes from achieving financial freedom and security. Having enough assets generating income to not have to worry about money or afford the lifestyle you want. Another myth is that you already need to be rich to build wealth, but in reality, you can start building wealth from any income level through consistency and discipline over time. Having a high salary helps speed things up, but isn't required. Plenty of average earners have amassed fortunes through regular investing, saving, and smart money management. Building wealth also doesn't require taking massive risks, like betting on hot stocks or crypto. While some get lucky speculating, educated, diversified investing, tailored to your goals, and risk tolerance is the surest path. Wealth is accumulated through patience and compound growth. Now, a strong financial foundation must first be established. This means clearing any high-interest debt that eats into your cash flow. Then, build up emergency savings and cash reserves to handle unexpected expenses and ensure you have investing capital. The key is living below your means, budgeting diligently, saving automatically, and not developing a taste for luxurious living beyond your actual means. Do this before investing so that you have the stability and resources to build wealth. With the right perspective and habits, nearly anyone can pursue wealth creation. It takes commitment and tuning out flashy get-rich hype. Wealth is accumulated through the disciplined process of spending less, saving well, and investing for the long term. The bottom line is this: financial freedom is closer than you think. By applying the wealth creation principles we'll reveal to you in this video, you can put yourself on the path to financial independence and security. Are you ready to build wealth that will last? All right, let's dive into the proven principles and strategies for effective wealth building. Strategy number 1: earning money. The first building block is earning money. Of course, you need some income to have anything to save and invest. A job is likely your main source, but also consider side hustles or entrepreneurial ventures to maximize earnings. Building multiple streams of income unlocks the potential to save and invest more. Passive income like rental property earnings or dividends can turbocharge wealth growth. The more you earn, the greater resources you have to put to work. Look to increase your salary over time through promotions, bonuses, raises, or finding higher-paying jobs as your skills improve. Seek opportunities to monetize skills or hobbies through freelancing, consulting, or selling products. The internet has expanded possibilities for earning. Wealthy people focus intensely on income maximization But you don't have to be obsessed with money or become a workaholic. Find ways to boost earnings that align with your interests and abilities. Automate saving and investing to ensure money is put to work before you can spend it. Earning well is step 1 to building wealth you can live off of. Strategy number 2, setting financial goals. All right, you're earning well and feeling motivated, but now you need a direction and a roadmap. To build wealth effectively, clarity comes from defining your financial goals and making a plan. Start by getting specific. What does financial independence look like to you? Do you want to retire early, send kids to college, or build a dream home? Define your vision in detail. Quantify what you need in dollar amounts and investment returns to reach those goals. Break them down into milestones, like having your first $100,000 by age 30. This gives tangible targets to shoot for. Next, develop a clear path to bridge the gap between where you are and where you want to be. Determine how much to save and invest monthly to reach your goals on schedule. Research investments and wealth-building strategies aligned to your goals. Develop a personalized financial plan to direct saving and investing. Seek professional advice to refine your plan if needed. Clearly defined goals help transform the abstract idea of getting rich into an actionable strategy. Track progress towards your goals and revise your timeline if needed. Stay adaptable, but persistent in pursuing your vision of financial independence. Strategy number 3, saving and budgeting. You've set big goals. Now it's time to execute your wealth-building game plan. Building wealth starts with consistently saving a portion of your income. It is crucial to accumulate capital for investing. Make a saving habit by automatically transferring a set amount into savings and investment accounts each month. Pay yourself first before spending on other items. Over time, watch interest compound. Build an emergency fund with 3 to 6 months' expenses before investing. This provides stability and keeps you from tapping investments for unexpected costs. Create and stick to a budget that leaves ample room for saving. Reduce unnecessary expenses and be selective with spending. Use apps to track spending and optimize budgets over time. Delay gratification on luxuries until you've built sufficient savings. Watching your net worth steadily grow will ultimately provide more satisfaction than material things. Consistent saving is the fuel for wealth building, so make it a priority. Spend smartly and get your money working for you. Strategy number 4, investing. All right, you've got savings built up. Now it's time for your money to really work for you through investing. To turn savings into lasting wealth, investing is essential. Savings lose purchasing power over time due to inflation, while investing offers compound growth. Consider vehicles like stocks, ETFs, mutual funds, and real estate, depending on your goals and risk appetite. Workplace retirement plans like 401ks offer easy investing. The key is diversifying investments across asset classes and markets while focusing on long-term growth. Periodic rebalancing helps maintain target allocations. Don't attempt to time markets perfectly. Stay invested through ups and downs, avoiding emotional reactions. Add new capital regularly through dollar-cost averaging. Historically, markets have positive returns over 5, 10, and 20-year periods. With a sufficiently long horizon, market volatility smooths, and the power of compounding drives wealth building. Start early and be consistent. Reinvest earnings and minimize fees. Let compound interest work its magic. Patient, disciplined investing is the surest path to wealth. Strategy number 5, protecting your assets. While growing your money is crucial, protecting it from financial predators is equally important. Losing wealth can set you back years. That's why insurance and risk management are key. Evaluate your risk exposure and get proper insurance coverage. This includes health, life, disability, home, and auto insurance. Don't assume you're covered through work. Review needs annually. Set aside funds to cover deductibles. Consult professionals to establish legal protections, like trusts, limited liability companies, and estate plans, to shield assets. Update beneficiaries regularly. Manage portfolio risk through diversification, hedging, stop losses, and safe harbor investments, like cash. Don't take excessive risks, chasing unsustainable gains. Pay down liabilities and maintain good credit to ensure continued access to affordable credit. Save for big upcoming expenses to avoid debt. While investing requires a degree of risk for growth, have prudent protections in place. This lets you sleep better at night, knowing your assets are shielded. Strategy number 6. Managing taxes. Taxes represent one of the biggest wealth destroyers. Effective tax strategy optimizes what you pay while remaining compliant. Utilize pre-tax retirement accounts, like 401ks and IRAs, to reduce taxable income now while benefiting from tax-deferred growth. Harvest tax losses in your investment portfolio to offset realized gains and limit capital gains liability. Avoid short-term trades generating higher taxes. When possible, choose investments providing dividends and long-term capital gains taxed at lower rates than ordinary income. Consider relocating assets to jurisdictions with more favorable tax treatment. This can include moving to low or no income tax states. Work closely with a tax professional to maximize deductions, manage brackets, and exploit legal loopholes to minimize taxes. What you save in taxes can supercharge wealth building. In conclusion, while get-rich-quick schemes sometimes may be enticing, the tried-and-true way to build wealth is through regular saving and investing, and patiently allowing that money to grow over time. It's fine to start small. The important thing is to start, and to start early. Earn money and then save, and invest it smartly. Protect your assets with insurance, and minimize your tax exposure. Remember, building wealth is a journey, not a destination. Celebrate your successes along the way, and don't get discouraged by setbacks or obstacles. With patience, discipline, and a clear vision of your goals, you can achieve financial success and build wealth over the long term. With this blueprint, your financial foundations will strengthen over time, as compounded returns accelerate your wealth creation. Anyone willing to commit can build substantial wealth, even beginning with modest means. Now, if you enjoyed this video and found value in these lessons, we'd greatly appreciate it if you could give this video a thumbs up. Also, make sure to click subscribe and turn on the notification bell to stay ahead of our uploads. Stay tuned for the third part of our financial fitness series, where we'll provide specific budgeting strategies and money management tips for greater stability and success in your wealth building journey. Until then, stay money-wise.